Hi everyone, welcome back to Finance with Ajay. I'm Ajay Sharma, and today we are diving into one of the most exciting and often confusing topics in personal finance, investing. If you've ever wondered, should I invest in stocks, bonds, gold, or even crypto? This video is for you. By the end, you'll know exactly how these investments work, their pros and cons, and how you can create a balanced portfolio that fits your goals. Before we jump into the details, let's answer the big question: why invest at all? 1. Beat inflation. Your money loses value if it just sits in a savings account. Investing grows your wealth. 2. Achieve goals. Buying a house, funding education, retirement planning all require long-term wealth growth. 3. Financial freedom. Investments create passive income streams so you are not only dependent on your salary. Remember, saving keeps money safe. Investing makes money grow. Both are necessary. Let's start with the most popular one: stocks. White heavy checkmark. What are stocks? Times when you buy a stock, you own a piece of a company. Times if the company grows, so does your shares value. White heavy checkmark. Why invest in stocks? Times high potential returns. Times easy to buy and sell through stock markets. Times many companies pay dividends, extra income. Warning sign: risks. Times volatile prices can swing up and down. Times requires research and patience. Pushpin pro tip: beginners should start with index funds or ETFs. They spread risk across many companies instead of betting on one. Next, let's talk about bonds, the quieter, more stable cousin of stocks. White heavy checkmark. What are bonds? Times essentially, you are lending money to governments or companies. Times in return, you get interest payments and your money back at maturity. White heavy checkmark. Why invest in bonds? Times lower risk compared to stocks. Times provides steady, predictable income. Times good for preserving wealth. Warning sign: risks. Times lower returns than stocks. Times sensitive to interest rate changes. Pushpin pro tip: keep bonds in your portfolio for stability. A common rule is the 100 minus your age rule. If you are 30, aim for 70% stocks and 30% bonds. Now let's talk about gold, a favorite in India and many countries. White heavy checkmark. Why gold is popular? Times it's considered a safe haven during market crashes. Times protects against inflation. Times easy to buy as jewelry, coins, ETFs, or sovereign gold bonds. Warning sign: risks. Times gold doesn't generate income, no dividends or interest. Times prices can stagnate for long periods. Pushpin pro tip: gold should be around 5-10% of your portfolio, mainly as insurance, not the main driver of wealth. And finally, the most talked about but also most debated: cryptocurrency. White heavy checkmark. What is crypto? Times digital currency built on blockchain technology. Times examples: Bitcoin, Ethereum, etc. White heavy checkmark. Why people invest? Times high growth potential. Times some see it as the future of money. Times decentralized and global. Warning sign: risks. Times extremely volatile, prices can rise or fall 50% in weeks. Times still unregulated in many countries. Times no guarantee it will replace traditional money. Pushpin pro tip: if you invest in crypto, limit it to 5% or less of your portfolio. Treat it like a high-risk bet, not a retirement plan. So now that you know the basics, how do you put it all together? Here's a simple framework. 1. Start with safety, a emergency fund plus some bonds. 2. Add growth, majority in stocks or index funds. 3. Add protection, a little gold. 4. Add high-risk play, small percentage in crypto, optional. Example portfolio for a beginner, age 30. Times 60% stocks, index funds, ETFs. Times 25% bonds. Times 10% gold. Times 5% crypto. This gives balance, growth plus stability plus protection. Common investing mistakes beginners make. Times chasing quick money. Times not diversifying. Times selling in panic when markets crash. Times ignoring fees and taxes. Times not starting early. Time is your biggest ally. To wrap up, stocks grow wealth, bonds give stability, gold protects, and crypto is optional for risk takers. A mix of all these, based on your age and risk appetite, will set you on the path to financial freedom. Start small, stay consistent, and remember, investing is a marathon, not a sprint. If you found this video helpful, make sure to like, subscribe to Finance with Ajay, and hit the bell icon so you don't miss future videos on personal finance and smart investing. I'm Ajay Sharma, thanks for watching, and I'll see you in the next video.